Stand, you've got the S&P, the Dow, and the Nasdaq all lower right now. The Dow off by 31 points. For the S&P 500, this is the 7th straight day of declines. The Nasdaq losing 2/3%. Let's go live now to the Nasdaq, where Abigail Doolittle has more. Abigail?
Hi there, Scarlet. Well, it certainly has been another volatile day for the Nasdaq. If you can believe it, the index was actually up ever so slightly this morning, but has spent most of the session down. In fact, at the lows, down 1%, closer to those lows right now, and similar to the S&P 500 on pace for its 7th daily decline in a row. But that's the longest losing streak since April, not 2011. Now, dragging for most of the day are some of the big internet stocks, including Amazon, Alphabet, and Facebook. Now, Facebook, as Matt mentioned, does report after the close. This is the last of the big tech marquee reports for this earnings season. Investors are looking for 97 cents in adjusted earnings on $6.9 billion in revenue. And Bloomberg intelligence analyst Jitendra Warrell, he says that one of the upside of the drivers here is the fact that Instagram is ahead of schedule. On the other side, though, one possible downside is the fact that some metrics are worsening. Now, one metric that investors will certainly be keeping an eye on, mobile. Will it continue to be a huge driver? Investors are expecting this to be 85% of revenue. But however you slice and dice this one, Scarlet, we're looking at huge growth. When we go into the Bloomberg and we take a look at G hashtag BTV 4735, this is a chart of Facebook right out of its IPO in white. And then in aqua, we have the company's sales. And in purple, we have the earnings. And we just see beautiful uptrends in all three. Now, interestingly, this quarter, more growth, 54% year-over-year growth for earnings or sales, 213% year-over-year growth for earnings. So again, huge growth. This is expected to decelerate a little bit, so this could be of some concern to some investors. But so long as these trends, these uptrends basically remain intact, it suggests that there could be some more bullish upside ahead for Facebook over the long term, Scarlet.
So clearly a rough day for Facebook if you're looking at the shares right now, but that uptrend really illustrates how far it's come. What else are you hearing when you look through the research on Facebook?
Well, you know, again, the big thing that's going to investors will really be looking for is that mobile participation. Will they be able to put up big numbers from the mobile? And the uptrend that you were just speaking about, we took a look at a chart yesterday that was pretty interesting. And we go into the Bloomberg and we take a look at G hashtag BTV 4701. The uptrend has been tested perfectly today. We see that the stock has touched right down to it, suggesting that maybe that the stock has found support for this near-term weakness. The buyers have really stepped up and supported it. It's unclear. This, of course, could break, but right now this chart might suggest that all of the metrics that investors are looking for to be hit, and it's important to remember this company has put up monster quarter after monster quarter. They continually beat. This chart may suggest that another strong quarter is ahead for Facebook, Scarlet.
All right, good stuff. Thank you so much, Abigail Doolittle. The takeaway there is uptrend for Facebook.
The Federal Reserve left interest rates unchanged while reinforcing expectations for a hike next month. Let's get some more insight into the decision with PIMCO Managing Director Richard Clarida. He also worked as an assistant U.S. Treasury Secretary. Richard, thank you very much. What's the big takeaway for you from today's Fed announcement?
Well, I think the big takeaway was they didn't want to make any waves 6 days before an election, and they didn't. I think they certainly didn't change our view that a rate hike at the next meeting is likely. I guess of note is instead of having 3 dissents, there were 2, which I don't really put too much into that. I think Rosengren still wants to hike. And then also they did choose not to say that they would be considering a hike at the next meeting. That was language they'd used a year ago, but they gave enough other hints in the statement that I think it's really the goal was not to make any waves.
Do you think politics was the only reason why the Fed didn't move today?
I think there are a couple of reasons. I think also, even though, Scarlett, they say every meeting's live, no one believes that.
Why do they do that?
Well, I don't know. What they should do is have a press conference at every meeting.
Right, if that's the case.
But they don't. They only have a press conference, as you know, 4 times a year. And even though in theory they could hike or cut without a press conference, the pattern that they're on is to do that. So I think that was really the issue. The election, of course, was also a factor.
A couple of economists at the National Bank Financial in Montreal said that the FOMC said the case for a rate hike has continued to strengthen, but wait for some further evidence for taking action. And they think the use of the word some is a little bit dovish. In fact, a number of people that I read, Ian Shepherdson, Tom DiGoloma, Jason Shanker, all thought it was a little bit dovish. There's not a lock for a September hike, is there?
No, you don't want to say a lock. Obviously, something could happen next Tuesday, and we have some payroll data.
Well, that's key, Richard. I mean, if there's a shock to the system, obviously that would stop a rate hike. Would a Trump win be a shock?
I'm not going to speculate on that. Obviously, they didn't hike in part because of Brexit, so I think they would be in wait and see. But I think a rate hike is in the cards for December. It's not a slam dunk. Obviously, global developments could factor in, but I think this is a committee that expects it will be hiking in December. And let's face it, it's been a year. If this committee goes an entire calendar year without hiking, then the one and done crowd will actually have a pretty good argument that these are folks that really can't get off zero. So I think there will be a lot of agreement around the table to hike in December based upon what we expect to see in the data.
Okay, so last year we got a hike in December, and we went into this year. The dot signaled 4 hikes.
Yeah,
maybe
that was a mistake.
Way off the mark.
Yeah.
Maybe we'll get 1. Markets pricing in maybe not even a sure thing of another hike next year if we do get a hike in December. I mean, it's possible. Looks about a round of a coin flip. What do you think? I mean, do you think it's just going to be the same, maybe 1 hike next year?
Well, I think there's a committee that realized it was a mistake to signal a hawkish liftoff, more hawkish than really anyone expected. Consistently, the committee's been more hawkish in the dots than market pricing, and the committee has converged to the dots, and the dots have converged to markets, not vice versa. My expectation is that next year the impetus will be like this year. They'll want to hike. They'll want to continue the process. They probably won't be signaling 4 hikes. We could get 2 hikes next year.
Are the dots helpful at all? I mean, obviously those 4 dots totally off the mark. Some people say that the existence of that 1 dot out there kind of forces them into December, even if they maybe didn't want to do it. Do the dots add anything in your view?
You know, the dots have a lot of problems. I think they could be improved. I and others have written on this. I do think they do provide some useful information. They are a useful tool in signaling what the Fed thinks the destination will be. You know, 2 years ago, the Fed said they were going to 4.25. Now they say it's under 3, and it's been helpful to ratify that this is going to be a very gradual liftoff to a low destination.
Somebody was telling Pim Fox on Bloomberg Radio this morning that this shows the Fed has done a fantastic job of communicating exactly what its plan is. Is that a good thing, do you think, Richard, that we all sort of think we have a better grasp on what the Fed wants to do, that there's some transparency in there, that we have these dot plots on the Bloomberg?
Well, again, I think the Fed's problem is for the last couple of years, certainly for this year, markets have tended to do well. Stocks have been high, credit spreads are tight, EM has done well. Markets have tended to do well in the last year or so by ignoring the Fed, not listening to the Fed. So I actually think the disconnect is a problem. The fact that the dots are here and market pricing is here is something that over time creates a problem for the Fed. So, you know, so far, no harm, no foul, as some people might say. But it's not a good notion when markets do well by ignoring the Fed, and that's where we've been.
We start off by talking about dissension. There are 3 dissents in September, 2 dissents today. Eric Rosengren voted with the majority.
What changed?
In December,
What changed for Rosengren?
if they go ahead with a rate increase, do you expect that to be unanimous? And does that matter if it is or isn't?
That's a great question. My sense, you never know. We'll find out in 6 weeks. My sense is that it will be unanimous. I mean, the 2 people who I think the chair will have to do a lot of job persuading is probably Governor Tarullo and Governor Brainerd. They've been very public in their doubts about the wisdom of hiking. On the other hand, it is very unusual for presidentially appointed Federal Reserve governors to oppose a chair. It happened under Volcker in the 70s, but in the last 20-plus years, it would be rare for that to happen. And so I think if we get a hike, Chair Yellen will persuade Brainerd and Tarullo on board.
All right, Richard Clarida, PIMCO Managing Director, thank you very much.
Always. Thank you.
Coming up, what's behind the perceived lethargy in the financial markets, and where will global GDP growth go? We asked Citigroup Chief Economist Willem Bouter and Neuberger Berman's portfolio manager Steve Eisman. You probably know him from The Big Short. Next, this is Bloomberg.
Bloomberg.
I'm Scarlet Food. It's time for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. The European Union's battle over London's financial services sector could drag in an unexpected player, the U.S. It could happen if French or German leaders try to pry away the almost $533 trillion of swaps cleared by London Stock Exchange Group's LCH unit annually. Talks are already underway within the EU to limit euro clearing outside their jurisdiction. That move could also impact the U.S. The Department of Justice is going after AT&T and DirecTV in a lawsuit alleging that they colluded with rival pay TV services to gain leverage in negotiating for rights to televise Los Angeles Dodgers games. Now, according to the DOJ, during negotiations with Time Warner Cable, DirecTV exchanged information with Cox Communications, Charter, and AT&T about their plans to carry the Dodgers channel. IBM has scored a major tax victory in India. That's according to the Nikkei, which says the country's high court has ordered a reassessment of an $814 million unpaid tax claim against Big Blue. The report cites unidentified tax department officials. The court order is another step in India's efforts to end tax disputes with foreign companies. Some closure today in the invasion of privacy lawsuit that drove online media site Gawker into bankruptcy. The company will pay Terry Bollea, also known as by his professional sports name Hulk Hogan, $31 million plus proceeds due to creditors. That is according to papers filed today in federal court. Hulk Hogan originally won a $140 million verdict against Gawker. It then shut down its main website and sold others to Univision. And that is your Business Flash update.
What'd you miss? Are markets losing confidence in quantitative easing? And will we see a rollback of Dodd-Frank? Those questions, among others, were lobbied at Citigroup Chief Economist Willem Bouter and Neuberger Berman Portfolio Manager Steve Eisman. You probably know him from The Big Short. That was on Bloomberg Surveillance today. Tom Keene kicked things off by asking Eisman to explain perceived lethargy in the financial markets.
If you step back and ask why have the markets gone up over the last several years, I think it's a combination of two things. Number one, good corporate profits, and number two, quantitative easing. You know, corporate profits now for the last year and a half have been punkish. People are beginning to lose confidence in quantitative easing. That's why the markets are lethargic.
On a simplistic basis, we saw leverage in the run-up to The Big Short. Our colleague, the wonderful Mark Pittman, reported on this, the buildup in housing leverage and such. Do you see a buildup in leverages now, plural, leverages that can lead to the kind of shocks we saw 10 years ago?
Definitely not in the U.S. The Fed has done actually a very good job of deleveraging the system. Simple example, Citigroup used to be levered 35 to 1. It's now levered 10 to 1. It's a world of difference.
There is a stark contrast between the clearing of financial risks in Europe versus the clearing of financial risks in America. You wrote about this presciently years ago.
Well, first of all, Europe, at least continental Europe, is a bank-intermediated system. The banking system sector is a small part of total intermediation. This country is less significant. Yes, it's much less leverage than it used to be, but there's a lot of leverage outside the banking sector. So I would not be too relaxed about financial stability in the U.S. We're nowhere near 2008, but outside the financial sector, non-financial corporate sector and all that, I think that leverage is worryingly high. In Europe, of course, they never cleaned up the banks. And this is a process of not doing much year after year and pretending to do a lot. The extend and pretend is not really a strategy for getting intermediation going again.
What effect would the rolling back of Dodd-Frank have in the United States on the financial sector? Would it be positive? Would it be negative?
Rolling back Dodd-Frank would be a disaster. It's a mistake. It's actually done a very good job at de-risking and deleveraging the system. It's not perfect, but it's created an iterative system that has improved the financial system enormously. I could say honestly, for the first time in my Wall Street career, I am not worried about the U.S. financial system. I was worried about it my entire life. People who advocate rolling back Dodd-Frank don't know what they're talking about.
Yeah, we just hear it from the Republican candidate a fair bit. Willem Bouter, let me ask you the same question. What effect would it have?
Rolling back Dodd-Frank would create a mild case of panic, I think. While Dodd-Frank is, intrusive, overbearing, unnecessarily complex, going back to to the pre-Dodd-Frank situation is just asking for another big financial kerfuffle. It's not going to happen.
Picking up on that then, when you look at the financial regulation that Donald Trump is talking about and changing the nature of the financial regulation, how do you think that would actually happen? Because the financials have been performing, the stocks have been performing of late, and I'm wondering, is that down to what is happening with the yield curve, or is that down to what is happening with the fact that Trump's chances look a little bit better?
I don't think it has anything to do with candidate Trump at all. It's the fact that people are starting to think rates are going to go up. Maybe the Fed will raise rates. I don't think it's anything more complicated.
Steve, help me with the dampening reality of lower for longer. A lot of fancy people, economists, strategists, academics on Wall Street are taking their theta out on the x-axis. They're going out, they're going out, they're going out, even to 2021. Do you have a belief in that, and what does it mean for Wall Street?
I think rates stay low for a long time. The biggest risk in the markets is that the markets lose confidence in quantitative easing. You know, I get a question all the time is when do I think that's going to happen? And I'm the last person in the world to ask that question to, because I lost confidence in quantitative easing 4 years ago.
I need you to reaffirm your global call. Congratulations on being way out front on tepid global GDP. Do you stay there this morning?
Well, this year's growth is likely to be slightly lower globally than last year's growth.
Does your team take 2.9% last quarter and take out exports and inventories and get down sub 2%?
I mean, for the U.S.
Yes, for the U.S.
I think that we predicted something like what came out. Yes, it's clearly, you know, statistical blip down Q2, statistical blip up Q3. Average it out and look at sub 2 growth for this year, and with a bit of luck, 2+ next year.
All right, that was Citigroup's Willem Bouter and Neuberger Berman's Steve Eisman talking with Bloomberg's Tom Keene and Guy Johnson.
Up next, Macau gambling shows a winning hand as the casino gaming revenue increases 8.8%. We'll break it down in our chart chat next. This is Bloomberg.
what you missed in today's chart chat, I'm looking at Macau casino revenue. And of course, Joe mentioned this yesterday. It's a big deal in the world of emerging markets. It is the orange line, and the last print shows a huge move up, the biggest monthly increase since May of 2014. All of this could be very telling for Wynn Resorts, which reports earnings after today's close. Now, the blue bars show that Wynn's quarterly revenue from Macau has certainly dropped off the last couple of quarters, but it's starting to make a bit of a comeback. It's down substantially from 71% in 2012. It's still about 60% of its revenue overall. And of course, the white line is Wynn's stock price. You can see a gap there between the orange line and the white line and the blue bars. We're going to look for that gap to start to close a little bit. Wynn Resorts, again, reporting after the close, Joe.
This morning, we got earnings out of Alibaba. The stock's selling off a little bit. But that stock has done pretty well lately, and one reason why is the cloud revenue growth. Anyone that's showing cloud growth, people are into these days, whether it's Amazon, obviously, Microsoft with Azure, or Alibaba. It's decelerated a little bit from the end of 2016, but it's still well over 100% year-over-year growth in this business segment. This is just turning into a monster business for a bunch of folks, and hedge funds love any of these companies right now that are showing growth there. So, obviously still huge, decelerating a little bit, but this is obviously one of the key stories with Alibaba.
I wonder if Jack Ma just, whatever Jeff Bezos does, Jack Ma does that. Is that basically his model?
Except that he has a bigger home market to do it in.
True, a much bigger home market, but he seems to follow every single step that
It's not a bad move if you can do it.
And it's not. I wish that I had done the exact same thing. Here's another thing I wish I had done. Facebook, this company, talk about a big market, obviously 1.4 billion users now? 1.7, sorry. They get a 22% share of the entire U.S. mobile ad market, so a massive share there. We surveyed 35 analysts and came to an average growth estimate for Facebook of above 50%. So they'll be coming out with earnings, obviously, after the bell, and we expect Facebook to post, once again, more than a 50% gain in sales.
And when Facebook IPO'd, the knock on them was that they didn't have any mobile strategy, which really just...
Right, and now they practically cornered the market.
Zuckerberg has vanquished all those critics completely. Yeah. All right, the market close is next. Take a look at the major indexes with less than 4 minutes to go before the close. You have down arrows across the board. The Dow off by 66 points, the S&P 500 down for a 7th straight day. This is Bloomberg. moments away from the closing bell. What'd you miss? U.S. stocks closing lower today with the S&P 500 now on a 7-day losing streak, falling to its lowest since July. I'm Scarlet Fu.
I'm Joe Weisenthal.
And I'm Matt Miller. We want to welcome our viewers who are tuning in live on Twitter. You can watch our closing bell coverage on Twitter every weekday from 4 p.m. to 5 p.m., assuming you can figure out exactly how to do it. I'm too old, I think, to know how to do it.
No, you're a millennial at heart.
Given a half hour, I could probably figure it out.
All right, we begin with our market minutes today on Fed Day. The S&P 500 extending its losing streak to a 7th day. It is now at its lowest level since July, and I was just noticing, Joe and Matt, that it's below 2,100 as well, which a lot of people had said is a key technical level.
That was one of those big levels. Obviously, today's Fed decision briefly resulting in a bit of a rally, but that did not last long. Not a huge sell-off by any means, but yeah, below 2,100.
All right, let's check out the IMAP here, SPX. I'll just call it up, IMAP, and see which industry groups are moving in which directions. Almost all red. Well, no, I correct myself. We are all red. If you look at the big industry groups, none of them gained. Consumer staples not doing quite as poorly as the rest of the batch. Real estate, utilities, telecoms, energy, all doing very poorly. So you've got the... oddly enough, those are very defensive. All the consumer staples are very defensive as well. It's fun to click into these little pie pieces and see who's doing the best of the bunch. As far as the healthcare providers are concerned, that looks like almost the most green. Actually, McKesson, some of the most green there. Take a look at some of the other stocks that were moving. I've got a few. There were so many movers in today's market. Facebook down 2% ahead of earnings, which are going to come out any second now. Allergan not maybe selling as much Botox as the street would have liked to see. Some guy's note said, there's no amount of Botox that can hide these wrinkles. I thought that was a pretty good note.
Good line.
ADP raising its forecast for full-year earnings, and Anthem saying actually that if it doesn't improve its business with the Affordable Health Care Act, that it is going to start pulling out as well of Obamacare. So I thought that was very interesting. But there are a lot of stocks moving today.
Let's look at the government bond market in the wake of that Fed decision. Yields down across the board, not very dramatic on the short end, a little bit more significant, below 1.8 on the long end. So it's interesting. That implies that the Fed decision was perceived a bit more on the dovish side, but obviously that didn't do anything for equities. Overseas, let's look at Greece, which is yields on the 10-year there below 8% for the first time in a while. So, you know, people always say, oh, it's only a matter of time before we're back to the negotiating table. But for now, it looks like some optimism that things are proceeding smoothly on the bailout front in Greece.
And we got to go back to the dollar when it comes to currencies. Under pressure, whether you're looking at it compared to the euro, to the Japanese yen, or to the Swiss franc. A lot of movement is actually into Swiss franc these last few days as the polls have tightened around Donald Trump and Hillary Clinton. And speaking of Donald Trump, we've got to use our thermometer of Trump, which is the Mexican peso. If you look at a 2-day intraday chart, it's been weakening versus the dollar by at least 1% now for a second day. The polls, again, showing that Trump is doing better, certainly than compared to a week ago. And I wanted to make a quick mention here of the South African rand. It rallied after a court ordered the release of a report on the alleged influence of President Zuma's friends. Zuma was trying to block the release of this report. He failed to do so. There are thousands of people protesting in Pretoria to march against corruption. So that's all led to some speculation that Zuma might be close to leaving office. We'll keep you posted.
Let's take a look at commodities. First, we got crude oil continuing to slide. You know, we were up around 50 earlier. There was a lot of hope that OPEC was going to get it together, but now some pessimism on that, closer to 45 on West Texas. And gold doing well, I mean, with the market volatility, with the easy Fed, with the concerns about the election, some bidding going on there in gold. And I think we got one more thing we're looking at.
Well, I'm looking at, I just want to point out something.
Milk. I want to point out milk.
Oh, yeah.
Milk has been on an absolute tear, up 30% over the last year. That's been really great news in New Zealand, which is a very milk-driven economy. The kiwi's been a real winner. So a lot of softs have been doing well. Yesterday we talked about oranges. So a lot of
We're
the
big on soft commodities.
Yeah.
Is this full-fat milk, do you think, or skim?
I hope it's full fat.
I think full fat milk. Skim milk, maybe.
It's whole milk. Our producer Courtney said
it's whole milk. By the way, I wanted to point out, yesterday, Scarlet, you brought up that there were 6 losing days in a row for the S&P 500. Today, it's obviously 7 days with today's drop, and that is the longest losing streak in terms of days in a row that we've seen since 2011.
Ooh. Nice stat there. All right. Meantime, those are today's market minutes. We do have breaking news. We have Qualcomm reporting results. The chip maker, which of course tends to make chips for mobile phones, reporting profit beating analyst estimates. $1.28 for adjusted EPS for the fiscal fourth quarter versus the consensus estimate of $1.13. Revenue also higher than what was anticipated, $6.25 billion versus the consensus of $5.9 billion. And Facebook has just come out. So here are the numbers as we go through them. Third quarter monthly active users, 1.79 billion, better than what was expected. The estimate was for 1.76 billion. Revenue overall, $7 billion. So we topped the $7 billion mark when it comes to Facebook's sales for the quarter. Analysts were looking for 6.92 billion, and Matt had just showed us the rate of growth in Facebook's revenue, which was just astronomical, these double-digit percentages that haven't really tapered off. Adjusted earnings per share, $1.09. The estimate among analysts that we surveyed was for 97 cents. So 109 is better than the highest analyst estimate that we have compiled. Daily active users, 1.18 billion. The consensus estimate was 1.16 billion. And just looking through this, Joe and Matt, I don't see a number that's trailing analyst estimates.
Wait, I see one.
Please.
Mobile ad revenue. Oh, no, even that's not, well, that's not really behind it. That was mobile ads as a percentage of ad revenue, 84% versus 85% expected. But no, this is a very solid quarter. It looks like basically every measure is coming in clearly ahead of expectations. You see the stock selling off. I mean, this is not dramatic. Perhaps, the whisper number, people were looking for a bit more of a beat. It looks like solid beats across the board.
Yeah.
It looks like they didn't destroy estimates. The monthly average users, 1.79 billion versus expectations of 1.76 billion. So it's a beat. They didn't destroy the number. Maybe investors wanted to see a real bit more lights out. But obviously, it's still a company firing on all cylinders.
Exactly. And the stock has been doing very well. I mean, until a couple days ago, Facebook was up 8% in a 3-month period. Facebook is still up about a little more than 20%, I believe, year to date. It's up more than that over the last 12 months. So part of this could just be taking money off the table. If you've got a lot invested in Facebook, it's done really well. There's no reason. Some people might be thinking there's no reason not to take a little bit off the table.
I mean, this was a $40 stock 2 years ago, so it's been on a huge tear. And it's just a little bit off the all-time highs here. So you never know. Maybe people just got a little bit ahead of themselves. But the numbers speak to how well this company is really operating.
And we got a comment here from Mark Zuckerberg, the founder and CEO of Facebook. He says, we had another good quarter. So underplaying it a little bit here.
Nice.
We're making progress, putting video first across our apps and executing our 10-year technology roadmap. And, of course, this is a company, Paul Sweeney, our director of research at Bloomberg Intelligence, that has made video first its platform.
They really have. I mean, this is a company that, again, as Joe mentioned, a good solid quarter here across the board. I think, as Matt suggested, the stock is up over 20% year to date, so probably pricing in certainly, a very, very good quarter here. So, but I think, the issue here for this company is they continue to put up extraordinary top-line growth in excess of 50% on a company with $7 billion of revenue here. And I think I think the bulls on this name will still stand back and say, listen, I've got 2 or 3 years of growth here. There's a lot of monetization still to be done. Maybe not on the core Facebook platform, but on WhatsApp, Instagram, Messenger. Each of these things are at or exceeding 1 billion users in and of themselves, which then makes them, really, really attractive to advertisers. So as you step back, there's still a lot of runway to grow to grow this company if you take a look at consensus estimates.
Is there something that investors really want to see specifically, like whether it's video, whether it's international growth? Like what is the number that's sort of out there that people like the test for the company?
I think what the next leg for this company is for the management to come out and say, we are really starting to monetize some of our big assets like WhatsApp. And let's remember, they spent $22 billion for WhatsApp a couple of years ago with the stated notion that they were not going to monetize it, that they were going to focus on subscriber growth, focus on the experience. And most shareholders, I think, gave them a pass for that because the existing business was growing so strongly. But I think at some point, people are going to want to see the company start breaking out some data on those businesses, on those platforms, much like Google begrudgingly does with YouTube.
So the fact that it doesn't break out that data, if we could kind of glean or speculate on what it might be, do you think WhatsApp makes money at any point right now?
I think they are just starting to monetize some of these businesses here, because if you take a look, this is a company that grew its revenue over 50%, and if you take a look at Google, had a growth rate of 20%. So the incremental growth that we're seeing from Facebook reflects the overall, I think, superior growth of the Facebook platform, still growing user base dramatically, but they're also now starting to monetize. I think Instagram, to a lesser extent, Messenger and WhatsApp, but I think by their own admissions, they have not been very aggressive doing that yet.
And of course, you mentioned Facebook is the owner of these different messaging apps. It's like a portfolio here. At what point might Instagram cannibalize Messenger or WhatsApp?
Yeah, it's clearly, I think, an issue. We haven't seen it yet because they are all still putting up some very strong growth rates in terms of subscriber growth. They appeal to some different demographics. Instagram, for example, Messenger, kind of to a younger demo versus Facebook traditionally. So it looks like we're not seeing any cannibalization yet. But the question is, and I actually think advertisers are looking for other platforms where they can put their money. Right now, it really is a duopoly between Facebook and Google. And even though these are other platforms owned by Facebook, at least there's other demos that they can target, I think, with some of these platforms. So again, I think the bulls on this story say that there are still a lot more runway for top line growth.
If you're looking for something that came in under analyst estimates, Mark Gurman, our Star Tech reporter out in San Francisco, points out that the mobile advertising revenue is 84% of all advertising revenue. The street was looking for 85% to be mobile. But my question is that good or is that bad? Because you're talking about breaking out other businesses, right? If all of their revenue is from mobile, I mean, does that mean they're not doing as well as they could be in other, or would you be happy to see them doing literally everything on mobile?
I would like to see their mobile revenue, which we're essentially there, where their mobile revenue equates to their mobile usage. And right now, mobile usage is almost 90%, maybe a little bit north of 90%. If you think about some of the apps, that is a mobile-type platform. So as this company, starts to monetize its app business, you're going to see that number go even higher. So I think they're well-positioned, and they've done a very good job over the last few years, kind of turning around that mobile strategy, which, as you guys mentioned at the IPO, was really a concern.
All right. I just want to give a shout out to T Live, because this is a function that makes our job, I think, as a reporter so much easier, and it's going to make, obviously, your job as an investor a lot easier as well if you're using the Bloomberg. T Live, for any major event like this, just gives so much instant insight that it's unbelievable. I mean, Mark Gurman's comments are coming across here. Emma O'Brien's comments are coming across here. Annie Kuo. Tal Barak Harif has really spearheaded this T Live movement. It's just an incredible tool. I'm going to go out to Corey Johnson, who I'm sure also relies on this as a crutch once in a while. Corey, what do you think about... No, actually, apparently, Corey just walked away.
One nugget that I see here on T Live is that the operating margin reached an all-time record, 44.5%. What strikes me here is that it's not like Amazon, where it looks like Mark Zuckerberg really is building up a ton of cash, huge free cash flow, not spending like crazy on moonshots. So it's made a few big bets. You mentioned WhatsApp, a few others, but it's not like they're just blowing the money on sort of one huge growth thing after another.
No,
really
you're right.
Building up the cash in a high margin business.
It really is, and this is the the beauty of the internet model, which is what everybody's been chasing after, which is a business can scale so quickly. The costs are relatively fixed, and if you can scale a user base. And Mark Zuckerberg, said a couple of years ago, he thinks scale starts at 1 billion users, and that was really one of the, I think a little bit of a barb towards Twitter, maybe not meaning to do so, but it just suggested at 300 million users, Twitter does not have that scale. But clearly, Facebook has the scale, Instagram, WhatsApp, at or near that kind of scale.
And we could see Facebook shares pairing some of their losses from earlier, now only down 1.5%.
Right. Still down, though. I mean, solidly down. Let's go out to Corey Johnson in San Francisco. Corey, one of your colleagues out there, Sarah Fryer, is positing that it may be the mobile ad revenue number that's the reason for a lack of enthusiasm on the part of after-hours traders.
Yeah, I think that on a sort of quarter-to-quarter basis, there's some look for some monetization around Instagram
what that might mean as that ramps up, and that might help that mobile ad number. But I think you have to look overall at their ability to add on to higher and higher revenues for every user they've got, and to continue to add users. I mean, you look at their competitor Twitter on a much smaller scale, unable to add users in any meaningful way, and Facebook's still doing so and monetizing so much better with every given quarter. The momentum is clearly at their back still, and who knows how much further they have to grow. I know you guys touched on it briefly, but it's interesting to look at the things they've done with things like WhatsApp, where they are gathering data about users, are helping to target the ads more and more, whether it's video ads, whether it's mobile ads, but more and more targeted data. Marketers are clearly paying a lot more, willing to pay a lot more on this platform to reach those users, whether it's because the data is so targeted, whether it's because the users are so engaged, whether it's the fact that most, as we can see from these numbers today, most users of Facebook are on it every single day. And that sort of a targeted, focused usage has helped marketers reach the people who are seeing their Facebook feeds peppered with ads and don't seem to mind it.
Okay, Facebook is the most actively traded stock in after-hours trading, but I'm also paying attention to Fitbit, which is plunging in extended trading right now, down 27%, fourth quarter earnings per share and revenue forecast missing analyst estimates. Corey Johnson, do you think, and I know you've looked at Fitbit in the past, do you think this is peak Internet of Things, or is this something like Apple making headway and kind of encroaching on some of the early movers?
I think it's neither, really. I mean, in terms of the growth that you saw, you actually saw pretty significant growth from Fitbit in terms of year-over-year progress. You also saw ASPs, or average selling price. You know, the macro theory on Fitbit is someday competition. There's so much competition out there for these stupid fitness trackers and the morons who wear them, like me, and that we will, in fact, to go to cheaper and cheaper prices, or we'll go upscale to the Apple Watch. But in fact, Fitbit has seen tremendously rising sales compared to what we've seen in the Apple Watch, where actually they've seen contraction on a year-over-year basis compared to IDC numbers. But you also saw ASPs go up for Fitbit meaningfully, I think 12% on a year-over-year basis. So they're pushing users towards their Blaze watch and their Charge 2 devices, which are the more expensive things in their product line. But it may be a case of expectations getting ahead of what's actually happening at the company.
Well, and these are expectations that have been pulled down, and it's an incredibly massive miss. I mean, 14 to 18 cents. The street was looking for 75 cents. After already taking down their estimates, it's just knocked more than $1 billion off of the market cap in about 16 minutes.
And cutting their guidance going forward as well certainly doesn't help.
All right. We want to thank Corey Johnson, of course, our editor-at-large of Bloomberg Media, and Paul Sweeney, director of research at Bloomberg Intelligence, here on Facebook's results. Facebook down now only 1% in after-hours trading.
Coming up, the Federal Reserve leaves interest rates on hold while setting up a possible move in December. Matt Boesler is going to join us to give us his post-Fed meeting rundown. This is Bloomberg.
All right, more breaking news. AIG's results crossing the Bloomberg here. Third quarter operating earnings per share, $1, missing the consensus estimate by 20 cents. Analysts were looking for $1.20. Nevertheless, the company boosting its share buybacks by $3 billion worth, $3 billion worth of share buybacks. So that's another authorization of this repurchase plan. Apparently, contracts with accident victims was one reason why AIG posted profit that fell short of analyst estimates.
And, of course, we have, after the bell, Facebook and Fitbit earnings are out. Facebook down just modestly after beating pretty much across the board, solidly beating on revenues, earnings, monthly average users, but not dramatically. Oh, it's actually turned positive now. So I guess markets do like the beat. And
possibly more interesting, at least in the moment, is Fitbit. Look at that, 28% drop, wiping more than $1 billion off of that company's market cap in about 15 minutes or maybe even less after hours trading time. The company came out with an outlook that really disappointed. Fourth quarter adjusted EPS, Fitbit is saying will be as much as 18 cents. The street was looking for at least 75 cents after bringing down its expectations. So Fitbit having some real problems and losing.
And this is a stock, by the way, that was over $50 a share last year, so it's quite a fall.
It's gotten absolutely clobbered.
Coming up, we break down today's Fed decision with Bloomberg's Matt Boesler. This is Bloomberg. Let's get to the big story of the afternoon. Federal Reserve held rates steady for its November meeting in setting up next month for a possible hike. Matt Boesler covers the ins and the outs of the Fed for Bloomberg News. He joins us now. Matt, so they didn't hike. It didn't seem like they really caught markets by surprise in either much of a dramatic way, not much reaction. But what stood out to you?
Yeah, no, not at all. I mean, the market reaction was like there was no market reaction, basically. So it kind of like everything went right according to plan. We've seen another example of where the Fed came in and really stuck the landing nicely, didn't move things one way or another.
There's a tendency to do it. It seems a remarkable number of the times there's very little volatility after her decision.
Yeah, we talk about how cautious this Fed is, how slow they want to go. So it only makes sense that, you know, this whatever adjustment needed to occur today would have happened, you know, well before, and that's exactly what we've seen happen. So,
let me just before we get to charts.
Sure.
I'm sure everyone knows, and Neil Dutta wrote a note that said, like, obviously we knew this, but how come Eric Rosengren didn't dissent? What changed Because he dissented last time, and it seems like everything is pretty much the same as it was a month ago.
Yeah, that's a great question. It's not clear if it had to do with the election. He was interviewed a few weeks ago before this meeting, and he was asked, would you dissent in November as well, since you dissented in September? And he basically kind of said, it doesn't really matter, this meeting or that meeting, but if we're talking about this quarter or that quarter, maybe it matters a little more. So, maybe he feels like he already lodged his dissent for the quarter.
Cool.
And, didn't need to do it again. So.
I had a chart here that I was supposed to bring up for you, but I accidentally took it off my terminal, and so now I don't have it, and I don't know what it was.
I'm sure I have it. G hashtag BTV 4737.
There we go.
Is that what it was? There we go. So the year-ahead outlook. What are we looking at there?
Yeah, so we know that markets are really primed for a rate hike in December. And this shows the expected amount of Fed tightening over the next year in basis points. And so it's about at 30 right now. And if we get a hike in December, that'll be 25 of that 30. So the point is, markets definitely see a hike in December. This is something we've talked about a lot. And then nothing after that, right? Very little chance of tightening next year. So it just goes to show you that this really shouldn't be that big of a market event, because it's kind of priced in, and once we get past it, we're going to be done for a while, potentially. At least that's how the market sees it.
Now, going into this year, we had 4 dots, and so there was a lot of moving down. Assuming there is a hike in December and there will be fresh dots, what's a realistic number of dots that we could expect from the Fed for 2017?
So in September, we got 2 dots for 2017. So basically, the median participant on the FOMC saw 2 hikes in 2017. So if you divide that by 4, which is basically what we got this year based on their year-ahead outlook last year, you're about where we're at in markets right now. So maybe that makes perfect sense.
And there's a famed dots go on the Bloomberg.
Which you're looking at right now. Let's talk about euro-dollar butterflies. What are euro-dollar butterflies, and what do they have to do with the Fed funds target?
This is a good one for our deconstructing jargon segment.
Oh, yeah, totally. So I really like this chart because I think it adds another dimension to what we normally look at, which is sort of the slope of the yield curve, right? The 2-year less the 10-year yield. This shows you the curvature of the yield curve, okay? So what we're looking at is the difference between the amount of tightening priced in between 1 and 2 years ahead and the amount of tightening priced in between 2 and 3 years ahead. And that's what this white line shows you. And so right now it's been kind of hovering around 0, which indicates that basically, traders don't really have any view on whether there's going to be more or less tightening between 2 and 3 years from now as they do between 1 and 2 years from now. And I've circled where we are at in this chart, and you have to go back all the way to 2000 to see kind of like a similar stretch where there was just no view. And basically what this means is there's no risk premium in markets right now. There's no sense that, the Fed is going to have to tighten faster later on because inflation's going to get out of control, anything like that. Very benign outlook in markets.
Very cool chart. Matt Boesler of Bloomberg News, thank you very much for breaking it all down.
Coming up, the dollar continues to weaken as the Fed left interest rates on hold. We speak with Shahab Jalounis. He's Credit Suisse's global head of FX strategy. This is Bloomberg.
I'm Mark Crumpton. Time now for First Word News. Police say a man suspected in the killings of 2 officers in Des Moines, Iowa, surrendered to a state employee. 46-year-old Scott Green reportedly flagged down the man near rural Dallas County, west of Des Moines, and presented his identification.
Mr. Green was taken into custody without incident. He did complain of some kind of flare-up related to an existing medical condition, so he's been taken to the hospital just as a precaution. There were no injuries of any officers or Mr. Green during the arrest.
Authorities say the officers were sitting in separate squad cars when they were shot and killed ambush style. Those incidents took place about 2 miles and 20 minutes apart. Turning now to the race for the White House, a new Bloomberg Politics poll shows Hillary Clinton with a narrow edge among independent voters. In a race involving third-party candidates, Clinton leads Donald Trump 30% to 27%. Libertarian Gary Johnson gets 19%. The Green Party's Jill Stein is at 8%. Meantime, independent voters who cast ballots early have gone for Clinton over Trump, 45% to 21%. More than half of those surveyed say they expect Clinton to be the next president. President Obama says Secretary Clinton made what he calls an honest mistake by using private email and says it's now, quote, being blown up into just some crazy thing. In an interview with online news outlet Now This, the president offered his first public comments on revelations the FBI is reviewing more emails.
There is a norm that, when there are investigations, we don't operate on innuendo. We don't operate on incomplete information. We don't operate on leaks. We operate based on concrete decisions that are made.
The president says new voters hear, quote, all that noise and wonder if they should be worried about Secretary Clinton's behavior. But he says he has absolute confidence in her. The Pentagon says a U.S. airstrike in Syria last month killed a senior al-Qaeda leader who once had ties to Osama bin Laden. The target is identified as Haidar Kirkan. He reportedly oversaw the planning of attacks against Western targets outside of Turkey, outside of Syria, including Turkey. The most expensive U.S. weapons system ever is about to cost even more. The Pentagon will need up to another $500 million to finish the development phase for Lockheed Martin's F-35 fighter. This after the Pentagon's chief weapons tester warned the plane is far from being ready for combat. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Matt, back to you.
Mark, thanks very much. Let's get a recap now of today's market action. We saw equities indexes down across the board, with the Dow losing 77 points, the S&P 500 falling below 2,100, and as it was the 7th day in a row for the S&P to post a decline. That's the longest daily losing streak that we've seen on that index since 2011. So a long slew of losses indeed.
And, of course, we got some notable earnings after the bell, the biggest one being Facebook, which pretty much beat expectations across the board, whether you're looking at revenue, earnings, daily average users, monthly average users. Stock had been down earlier, but it's basically flat now. So, I mean, that stock, you can't really complain about any aspect of it. It's been on a huge tear. And then another one, Fitbit.
Absolutely crushed.
Absolutely destroyed. Terrible results out of Fitbit. I guess.
And a terrible outlook as well.
Yeah, that was a $50 stock earlier last year, now below $9 a share.
Wow.
Pretty ugly.
That is amazing. Now for a look ahead to tomorrow's earnings, Scarlet Fu has a little more for you, Scar.
All right, thank you, Matt. CBS is on the verge of a big identity change. Shari and Sumner Redstone, whose National Amusements owns an 80% voting stake in CBS and Viacom, want the two companies to merge. Now, Shari is pushing CBS's CEO Les Moonves to lead the combined entity that the Redstone family split a decade ago, all in the hope that Moonves can resuscitate Viacom's flagging TV and film businesses. So let's zero in on CBS and today's The Numbers Don't Lie. Let's start with the price action. CBS, which is the white line, has outperformed Viacom, which is the orange line, on a normalized basis by quite a bit as well. Investors have even pushed CBS higher since the announcement of this potential merger. Now, CBS is not just the most watched U.S. TV network. It actually leads the 4 major broadcasters in operating revenue. Ad sales are crucial for CBS since that makes up 85% of its revenue. Now, in the second quarter, ad sales slipped almost 3%. However, Bloomberg Intelligence is looking for a pickup, estimating that TV station ads rose in the high single-digit percentage in the third quarter, offsetting network ad weakness. Now, CBS says that unlike others, it has not seen weakness from Donald Trump's lack of advertising spending. Of course, any slowdown in network ad growth should be partly balanced by strong retransmission fee gains, which follows a trend in the industry. This chart shows how retransmission fees, which are in orange, that orange slice, are becoming a bigger slice of the revenue pie for networks. CBS's second quarter revenue benefited from a 44% jump in retransmission revenue. A potential weak spot for CBS is, believe it or not, the NFL. Falling television ratings for live games may hurt CBS more than others. According to Jefferies, a 10% shortfall in NFL-related ad revenue could cost CBS up to 6 cents a share in the fourth quarter. Now, with concerns about the shrinking audiences for live television, CBS has focused on licensing as well as online subscriber revenue. Its online streaming services, we're talking about All Access as well as Showtime, have amassed more than 2 million subscribers between them. We'll be breaking and following CBS's earnings when they're released after Thursday's U.S. closing bell. Matt?
All right, Scarlet, thanks very much for that. Now, what'd you miss? The dollar remained lower and weakened against most of its major peers after the Fed left rates unchanged. Traders looking for clearer signs that the central bank is determined to hike next month were left a little bit disappointed. Joining us now is Credit Suisse's global head of FX strategy, Shahab Jalanos. Shahab, thanks so much for joining us. Let me ask, first of all, what FX traders thought of this, because I saw a lot of other investors in the market saying that they thought the statement was a little bit more dovish than they would have expected.
Well, the thing to take account of is the dollar's been falling anyway because of growing worries about a potential Trump win in the presidential election. In fact, because ultimately the FOMC was interpreted as slightly hawkish, the odds of a hike have actually gone up a little bit now. There's been a small reinterpretation. If anything, that's stemmed the dollar's fall for the time being. So, but what I would say is right now, politics is having a much bigger effect on dollar trading than what the rates curve is.
Why does the dollar not seem to like the improved prospects of Trump winning? Is it his policies? Is it the uncertainty? Is it just the market doesn't like change? Like, if there's an aspect of it that you could connect to the dollar, what is it?
There's quite a few, to be honest. In the short run, it's the uncertainty aspect. You will have a new president with very different ideas about how economies should work to what we've seen in the past. If that leads to market volatility, like we've seen in the last few days, at the very least, the market may try and push back the first Fed hike, for example. That's dollar negative. In the longer run, the market may actually wonder, for example, whether the U.S. would stick to the strong dollar policy that's been officially the U.S.'s view. Now, whether that's not always been the case.
Does anyone really believe in the strong dollar policy?
Well, obviously the dollar's not been strong for the last 20 years. In the period that it's existed, it's not always been strong. But still, officially moving away from that type of policy is still a new development. The other thing to think about as well is that foreign central banks own hundreds of billions of dollars of U.S. treasuries. Would they necessarily want to keep an overweight position? We believe at the moment to have effectively an overweight position in the US dollar in an environment where there's a new president with much more potentially radical views on world affairs than what we've seen in the past. So there's a few different factors to think about there. Finally, protectionism as well, that's another issue as well, which definitely affects any NAFTA country, not just the US.
It certainly feels like the currency market is more sensitive than any other asset class to not just political developments, but any sense that the macro environment has changed. Fixed income and equities, yes, they do move, but they're kind of stuck in this range that they've been in for the last couple of months, if not years. But currencies, on any given day, could have massive moves.
Well, currencies are, in a way, the share price of a country. So they're the cleanest way of expressing political risk in relative terms between different countries. So I think that's, whether you're talking about the UK with Brexit or the US with a potential Trump victory, usually FX is the fastest place to see that type of risk priced in.
And speaking of political risk, let's talk about South Africa and the rand, because it's certainly been driven by all the reports that Pravin Gordhan, the former finance minister, who then became finance minister again, was going to be arrested. And then now you've got protests against President Zuma as well, and speculation that perhaps he might actually leave office. What's your prognostication for how this plays out?
This is not an easy one to call in the sense that the market's views on who will actually be running South Africa change almost on a day-to-day basis. Our viewpoint is that ultimately, as long as these political tensions persist, in the long run, it's difficult for the rand to maintain the types of gains that it's seen in the last few days. Sure, we've seen a move away from some of the worst near-term outcomes, but there's no clarity in terms of the long run yet. So we would probably look at any opportunities in terms of rand strength near-term to fade them from a longer-term perspective.
You know, we're used to discussing the fortunes of a country like South Africa or Turkey or Brazil as expressed in the currency. Now we've been doing it more with the UK and the US. Is this the EMification of developed markets?
I think this has been going on for some time. In fact, many emerging market currencies now have structurally lower volatility than G10 currencies, particularly, for example, Asian currencies. So I think things have changed. As long as there's political risk out there, a currency needs to reflect that. And these days, those political risks seem to be more common in G10 currencies than before.
Remarkable.
All right, Shahab Jalounis, thank you so much. Global head of FX strategy over at Credit Suisse.
All right, a quick programming note. Have you ever wondered what terminal rate or contango means? How about iron butterfly or nearshoring? Luckily for you, we're going to demystify those terms. Starting this Friday, we're going to deconstruct some of this jargon for you. You can see here that I have tweeted it out. Feel free to tweet some terms back at me that you find intriguing or confusing. You can also, of course, tweet at Joe, at The Stalwart, or Scarlet Fu at
Scarlet Fu.
With the hashtag WDYM. Coming up, a look at how Hillary Clinton is doing in early voting. We'll take you through the battleground states. This is Bloomberg.
I'm Matt Miller. It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. We'll kick it off with Valiant. It is exploring the sale of some eye surgery assets that are part of its larger Bausch & Lomb unit. That's according to a report in the Wall Street Journal. The assets could go for as much as $2.5 billion. Valiant is divesting assets to reduce some of its $31 billion in debt. The drug maker has also held talks with Takeda Pharmaceutical about the sale of its Salix drug business that could go for as much as $10 billion, according to the Journal. Maersk still hasn't hired any bankers to help navigate an historic split of its conglomerate structure. That's according to the CEO, Soren Sko. Officials say management intends to rely on internal resources to find the best way to divide its operations into energy and transportation units. Part of the group may be singled out for separate listings or mergers. Valiant Pharmaceuticals is being accused Wait, we just talked about Valiant, but I'm going to talk about it again. It's being accused of bungling the marketing of a female libido drug. Former investors of Sprout Pharmaceuticals filed a lawsuit today claiming Valiant violated the buyout's terms by overcharging for ADYE, I think it's called. As a result, the former shareholders say they're being shortchanged on millions of dollars in royalty payments. Valiant acquired Sprout for $1 billion last year. 21st Century Fox is charging more than $500,000 for a 30-second ad during tonight's World Series finale. The ad price has nearly doubled since the series began. Intense interest in the matchup between the Chicago Cubs and the Cleveland Indians. The two teams with the longest title droughts in baseball history have pushed Fox's ratings and its ad rates to recent highs. And that's your Bloomberg Business Flash. Joe?
What'd you miss? Early voting is underway in the U.S. battleground states, and with just days left before the election, the numbers are telling different stories about Hillary Clinton's campaign strategies. For more, let's bring in Sahil Kapoor of Bloomberg Politics. Sahil, I kind of get the impression that people can tell whatever story they want from early voting. I see lots of people on Twitter who all say very confident things one way or another. They're like, oh, Democrats really underperforming, Hillary doing great. What's your interpretation? Is there a clear message that we can take away from the early voting figures?
It's true. Everyone has a hot take 6 days out from the election on Twitter. But here's what to look out for with the early vote. In presidential election years, they tend to be somewhat more predictive of the outcomes than they are in off years like 2010 and 2014 when they were way off. In 2012, they were reasonably close. What's happening right now is, so as of yesterday, 26 million Americans had already voted early. We're seeing some good news and some bad news for Hillary Clinton. The bad news is that African-American turnout seems to be down. This is obviously a crucial constituency for Democrats that powered President Obama to 2 victories. But she's also doing better than the president did in 2012 with Hispanic voters, which bodes well in states like Nevada, states like Colorado, and Florida. So it's a mixed bag right now. I wouldn't discern too much from it. But that's what we're seeing in the early vote at the moment.
How much historical data do we have on early voting? Is it something where we can really draw many conclusions from it? Because, I mean, I don't know. I might be behind the times, but I've never gone to vote early. And that might just be because we live in New York State. But is it an option for most people in these swing states? And was it an option 4 years ago or 8 years ago or 12 years ago?
Scarlet, I wouldn't read too much into this because the laws are always changing. Right, so Pennsylvania does not have early voting right now. A number of states cut back on early voting, like North Carolina, between 2012 and now. Things are constantly changing. Things are constantly in flux. No electorate looks the same as the previous election, and every change brings with it certain switches that could play out differently in the early vote. So I wouldn't read too much into it right now. We have 6 more days. We'll track it closely, but that's what
I don't understand the point because. You can just wait till the day and then go to your local elementary school in the basement, do your voting, and get like a little pitcher, a little glass of milk or something when you do it. It's always a lot of fun.
People don't want to wait in line, maybe.
What about people switching early votes? Is that possible? Because I think I heard Donald Trump saying something about you could go back and change your vote if you want to.
I don't know Matt. I think each state can make their own laws on this stuff, but I don't know that this is a widespread phenomenon. The idea of switching, I'm not even sure it's legal everywhere. This is not something that comes up that I've heard much of at all.
Speaking of this switching vote question, what do we know about the type of people who vote early? I mean, people say, these polls are getting less meaningful because so many people have voted. But are the people who voted early the type of people who are ever going to change their mind in the first place?
Probably not. Early voters tend to be more base voters. They tend to be more entrenched, whether it's with Democrats or whether it's with Republicans. Democrats tend to have a higher proportion of their base voting early than Republicans do, and Republicans tend to make it back on Election Day. In the case of 2014 and 2010, make it back in huge numbers on Election Day. And the interesting thing there, Joe, is that the single biggest reason that voters, that people who are eligible to vote but don't vote, the single biggest reason they give for not voting is that they're too busy. That taking hours out of their day on Election Day would be too much of a burden for them. Either they're on the clock or they get paid by the hour. So that's the single biggest reason they cite, which suggests to me that the single biggest reason they vote early.
Maybe this
is
year,
to
because
save
the choices, they'll say the choices are too dismal. I mean, that's
that too. We're hearing some people say that. I think somewhere like 6 to 7% of people are still undecided right now.
All right, Sahil Kapoor of Bloomberg Politics, thanks as always.
Coming up, Dartmouth professor and former BOE policymaker Danny Blanchflower reacts to today's Fed decision. This is Bloomberg.
What'd you miss? The death of austerity. That's what former Bank of England policymaker and Dartmouth College economics professor Danny Blanchflower hopes to see.
That's a really good question. I think I would pull you to looking at the UK, where the new government came into place after the Brexit vote. One of the first things that they did was to say, austerity is over, we're going to move to fiscal stuff. Over the last week, there was a big attack on Mark Carney, and eventually the markets said, you can't do that, and eventually he was reappointed. But the turn now appears to be, we're going to go and start to the Brexiters and the people who were supporting austerity and now turning their fire on Chancellor Hammond in the UK, because the sense is that austerity is dead. The speed at which it is replaced is really the question. So I think Al was right. We're talking about the opposite to austerity, and I have been, as you know, probably the biggest opponent of the thing. It got us into a very bad situation. It meant that the central banks couldn't raise rates, couldn't reduce their balance sheets, stuck us at the zero lower bound, and thankfully, I think we're now in the position of starting to move away from there. But as Al said, but slowly, this is going to take a time, and we've no idea really in the US until we know the outcome of the presidential election, who controls the Congress, who controls the Senate, and what economic plans are going to be put in place. So I think it's uncertain, but hopefully we can declare the death of austerity.
Danny, how significant was it, the signal out of Mark Carney, that he's going to stay through the Article 50 negotiations?
Well, I wrote a column this week before the decision was actually made. I think what was really important was the attacks on him became very strong, very unpleasant, actually. And I said he was the only adult in the room, saved the British economy, turned it around. Probably tomorrow they're not going to have to cut rates because they did it before. I think the big signal was the government realized that, goodness me, they needed him. They needed him to stay for his full 8-year term. And he said, well, OK, I'll stay for a year. So I think it was really significant. But they are in trouble because they tried to undermine the independence of the central bank. Markets didn't like it. I didn't like it. All the other economists didn't like it. And eventually the politicians had to backtrack. But I think it's, you know, this move was complicated this week. But thankfully, Carney said, I'll stay on for a while. The UK couldn't lose its saviour.
That was Danny Blanchflower, economics professor at Dartmouth College.
Coming up, what you need to know to gear up for tomorrow's trading day. This is Bloomberg.
What'd you miss? The Fed did exactly what it was expected to do, nothing, and stocks did what they had been doing, which is continue falling. The S&P 500 on a 7-day losing streak.
Right, last time we saw that during the Eurozone financial crisis.
2011, so pretty incredible. All right, don't miss this. Tomorrow, you've got Credit Suisse earnings. Actually, it's tonight if you're in New York, 2 a.m. Eastern time.
2 a.m. Eastern. That's tomorrow.
It's tomorrow, but it feels like tonight.
Okay, if you go out and hang at the bars and then come back at 2 a.m.
That's what I do.
Like today. Okay, don't miss this Brexit court ruling. That's at 6 a.m. Don't stay out that late Eastern time. That will decide whether Theresa May can go ahead herself without asking permission from Parliament and file Article 50. Also, a BOE rate decision tomorrow at 8 p.m. Not expected to do
8 a.m.
8 a.m.
And at 8:30 a.m., I'll be looking at U.S. initial jobless claims, the weekly look at the labor market. As all the viewers know, it's been very solid, and we'll see if it continues that way.
Another read on the labor market before the big jobs report on Friday. That's all for What You Missed. Thanks for watching.
We'll see you back here tomorrow.
Have a great evening. This is Bloomberg.
I'm Mark Halperin.
And I'm John Heilman. And with all due respect to Team Trump, it looks like the Democrats think they've got this one in the bag. On a day when the New York Times delivers thrilling details about a new Tribe Called Quest album, we strike a musical theme on the show tonight, including Donald Trump's change of tune and the Clinton campaign's Blue State Jam session. But first, the polls pick up tempo. We can barely keep up with the onslaught of surveys from key state polls by Quinnipiac, CNN, and other organizations that flooded our inboxes today. With less than a week before E-Day, Florida remains a razor-thin race. In one poll, Clinton is up by 1 point among likely voters. In the other, she is up by 2 points. In Ohio, Donald Trump is ahead by 5 percentage points. In North Carolina, Clinton leads by 3. And in Pennsylvania, Clinton leads by 5 points in one poll and 4 in another. In Wisconsin, where Donald Trump campaigned yesterday and Mark Halperin was, Clinton is still up by 6, while her advantage in Colorado has shrunk to 3 points, while in Virginia, she's up by 5 percentage points. And finally, in Arizona, the state just last week that her campaign was talking about winning, Donald Trump holds a 5-point advantage. We also have a new Bloomberg Politics Purple Slice poll, national poll of independent voters. It shows Clinton with a small lead among that group, 30 to 27%. Man, that is a lot of data. So, Mark, you've been out on the campaign trail. You've been up in Wisconsin, as I said. You're in Iowa today. You've been with Rudy Giuliani, Paul Ryan, Bill Clinton, all over the place. In this jumble of data, as you look at it from your vantage on the campaign trail, what is standing out to you right now?
Well, look, the two campaigns agree, Trump and Clinton, that her lead has narrowed nationally and in the key battleground states. It's funny, you and I both have the same experience every 4 years. If your campaign and the public or private data says you're up 3, you say, we got it, we got a solid 3-point lead, we're fine. If you're down 3, you say, aha, we're closing the gap, 3 points, we can overcome that through enthusiasm. So I would say that Donald Trump has, everyone agrees, and the public data backs us up, closed the gap. But there's still no, under the current public polling, there's obviously no plausible path to 270 electoral votes. He's got more to do if he's going to be in the game in less than a week.
Right. I mean, you look at this, and one of the biggest one of the biggest changes is that a week ago, smart people that we know were saying that the only suspense left in this election was whether Hillary Clinton would end up between 350 and 400 electoral votes. No one's talking like that anymore. But again, you look at all of these battleground state polls, and the states that Hillary Clinton needs to win, she's where she kind of has been. If you look at the whole of the last 3 months, she's got a small but stable lead in a lot of battleground states. And as you said, right now, if you look at all this data, there's not really a path for Donald Trump. Again, he's within the margin of error in a lot of places. He's within striking distance in a lot of places, but he is more behind than he is narrowing the gap to the place where he would want to be 6 days out.
Yeah, and even as Clinton plays defense in states like Wisconsin, Michigan, Pennsylvania, by going herself and having surrogates visit, she still can look at the map and say, unless there's just a huge national shock, she's going to win enough states, hold most of the blue states, and win enough blue states, and maybe North Carolina, in order to get to 270. So she can, barring a national shock and many states ending up different than the public data, she's got it.
Right. And look, I mean, again, it's just, the way you have to look at this on some level is 6 days out, whose hand would you rather be playing? Would you rather be playing her hand or his hand? There's no doubt you'd rather be playing her hand.
All right, so let's talk about the Trump hand. I'm here in Waterloo, Iowa. Bill Clinton, an event this evening. Paul Ryan doing an event not for Donald Trump, but for the local congressman here. Iowa, like a lot of battleground states now, it's hard to move more than just a few inches around without seeing some major national player, either a presidential candidate or one of their top surrogates. And, of course, all anyone really wants to know right now here in Iowa and elsewhere is the answer to one question. Is Trump cutting into Clinton's lead, or is he not? We just talked about the fact that the national and state surveys suggest he's cutting into the lead, but not enough yet to get all the way there. For a while, I've been saying that there are certain things Trump would need to do if he's going to be in a position to pull off an upset in this presidential contest. A surge in national polls was one of the things. We've seen that in the ABC News Washington Post tracking poll, but not a significant surge in any other major national polls. Trump also had to show more message discipline, I thought. he had to lock into some new Clinton controversies, and there had to be this expansion of the electoral map that there's indications of. So, John, if you look at my whole checklist, how many of those things has Trump done? Again, not to go ahead, but to put himself in the game.
I think it's fair to say that about half of those, you could look at that checklist and say that he's accomplished about half of them. Some of these things are going to be questions about what you meant with your language. I mean, what we're not seeing is a surge in Donald Trump's polling standing. That's not there. He's creeping into a more competitive position, but not surging. He's had a little luck. He has a little bit of a sense of momentum, but he's still playing defense in places like Arizona, and he's still not really driving. I know he's trying to drive, but he's not really driving, to my mind, a really potent message of change. I know you have thoughts about this list that are probably more nuanced than mine, but he's making some progress on some fronts on that list.
Yeah, if you put the list back up, I'd say the two right now that are both keeping Trump and his supporters energized, but also maybe creating a bit of an illusion, is the first thing on that list, winning news cycles. Trump went weeks after the Access Hollywood tape not winning a single news cycle. He's won several in a row now. That gives him a sense of momentum, which is number 10 on my list. Talking to Rudy Giuliani earlier today, covering Trump's rally last night, looking at the rhetoric from his campaign, they can go out and they can say a bunch of stuff ripped from the headlines every day now that gives them a sense that, hey, things are moving our way. Like I said, that's a positive for the Republicans because it gives them a sense of upbeat spirit, right. But it also can create a bit of an illusion. It can make them think the polls are tightening faster and more than they actually are.
Right. And God knows we saw that in 2012 with the atmospherics around Mitt Romney's campaign. Here's a really important thing that we don't discuss enough. We talk about early voting sometime on the show, but we saw some polling last night that suggests that Hillary Clinton is winning overwhelmingly with the early vote in Florida. We can't know for sure, but one of the things that's happening here is that even if all these things go Trump's way in this last week, there's been a lot of votes cast already, and Hillary Clinton may already have a substantial and maybe even decisive advantage in some states because of the early vote. All right, so both candidates are honing their closing pitch to voters in this final week. Donald Trump is out with a new ad today called United. It showcases a more uplifting message than we're used to seeing from the GOP nominee. A GOP nominee who used his convention speech to describe a country with, quote, violence in our streets and chaos in our communities. These days, Trump's stump speech, while still harping on the rigged system and alleged corruption in Clinton world, is also replete with optimistic rhetoric like this.
Hillary wants us to think small, wants us to believe things can't change, and wants our lives to revolve around Washington, D.C. I am asking you to dream big, to push for bold change, and to believe in a movement powered by the people and by their love of this great country. I'm tired of politicians telling Americans to defer their dreams to another day when they really mean another decade. America is tired of waiting. The moment is now. There is no challenge too great and no dream outside of our reach. There is not. There is no dream outside of our reach. Don't let anyone tell you it can't be done. The future lies with the dreamers, not the cynics and not the critics.
That was Donald Trump last night in Wisconsin. Future lies with the dreamers. All right, today at a rally in Miami, Trump repeated some of those lines, but also returned to his favorite go-to topics, WikiLeaks, and amid new reports that a Justice Department official involved in the Clinton email probe apparently gave the Clinton campaign a heads up about when congressional oversight hearings were going to take place and when Clinton's emails were going to be made public. So, Mark, as Trump plays these dual roles of attack dog and also inspirational, motivational speaker, how much does it matter that he's added some of these dollops of optimism to his repertoire?
Again, like a lot of things that are going right for Trump these days, it's not decisive by any means, but I think it's certainly helpful. I had one person who's watched Trump very closely after watching last night's speech in Eau Claire, Wisconsin, say if that had been the speech he gave at the convention rather than the darker speech he gave, this would have been a much different race for the Republicans during the summer. So I think it's helpful. People like an optimistic candidate. They like an optimistic president. Hillary Clinton toggles back and forth between optimistic and dark as well, but Trump has rarely been as optimistic in any speech I've heard him give as he was last night.
Yes, I mean, the part of the problem for Trump is that when he strikes those notes, at least in my ear, they sound so inconsistent and so discordant with the way in which he's campaigned for the past year and a half that they sound sort of false to me, right? And yes, I agree with you. This will now be like the third or fourth instance where we've cited a thing that if Trump had started campaigning in a different way and then in a disciplined way done it over the course of the months since May or June, the campaign would be in a different place. He hasn't done that, though, and so when you hear him talking about the dreamers and dreaming, you sort of think, who is that guy? Not like, oh, that's the Donald Trump that I've always known and loved.
Yeah, I mean, look, before he was a presidential candidate, I heard him talk optimistically like that quite a bit. There's always been dark in there. We'll see if he keeps up the optimism in the advertising and in his stump speech. All right, we'll take a break. Up next, Hillary Clinton and her surrogates continue their blue state tour. More dates announced today. We'll discuss that and more right after this. Welcome back to Waterloo, Iowa, where Bill Clinton's doing a rally for his wife tonight. The feud between the Democratic Party and the FBI continued today when President Obama, in an interview with Now This News, was asked about FBI Director James Comey's decision just a few days ago to inform Congress about its revived look into Hillary Clinton's email server. In sort of a backhanded way, President Obama both took a shot at the FBI chief, but also said that the recent move won't impact how voters feel about the presidential race.
There is a norm that, when there are investigations, we don't operate on innuendo, we don't operate on incomplete information, we don't operate on leaks. We operate based on concrete decisions that are made.
White House played down the president's remarks, but they come a day after the FBI released old, heavily redacted documents related to the 2001 investigation into Bill Clinton's controversial presidential pardon of the fugitive Mark Rich. The FBI says that the posting was in response to a routine FOIA request. So, John, what is going on with the FBI and James Comey as a player right now in this presidential race?
Well, I think the FBI, I mean, you and I are in agreement about the inappropriateness of what Comey did in July, the inappropriateness of what he did on Friday. And I think this thing the FBI did yesterday is crazy. It's just crazy that they are that they're injecting themselves into the race in this way. And the only way in which, well, I think it's crazy, number one. And number two, it's, I think, in a weird way now, actually starting to help the Clinton campaign because it's making them such a ripe, fat target for the campaign of discrediting that the Democrats want to do. The thing yesterday was just, I mean, I can't figure out what's going on there. The FBI, though, is really kind of out of control.
Whoever handles public affairs over there needs to take James Comey aside and walk through the remainder of the time between now and Election Day. I know I've seen a few people defend him in the last couple of days, but for the most part, Democrats continue to be aggressive. The White House, as I said, playing down what President Obama said, but clearly it went farther than his spokesman, Josh Earnest, went. I believe in the Clinton campaign says that their data doesn't show any damage to them from Comey, and even the Republicans play down Comey as a factor as compared to just the drumbeat from the Affordable Care Act, as we've been discussing, to all the WikiLeaks disclosures. There's new WikiLeaks disclosures related to potential coordination between the Justice Department and the Clinton world and the State Department and Clinton world. I think those things are going to get a fair amount of attention pushed by the Republicans in the next couple of days.
I have to say, if the DOJ manages somehow to get through, or the FBI manages to get through these emails from Weiner's computer before Election Day, and whatever they show, I now feel like they almost have an obligation to report to the country on what they found or haven't found, because this whole thing is just that they got us into this mess with this vagary and innuendo. They need to resolve it, I think, before Election Day in terms of what they find.
Maybe if they've got something resolved enough to say.
Yeah, right. All right. Donald Trump has been spending an awful lot of time in traditionally Democratic-leaning states this week. For a while, that didn't seem to bother the Clinton campaign. But down in this final stretch here, Hillary Clinton and her surrogates are spending valuable time and resources, not just in toss-up states such as Florida, Ohio, North Carolina, but also in blue states that just a week ago were considered safely, securely in her column. And today, Bernie Sanders and Chelsea Clinton are in Wisconsin. And on Friday, Hillary Clinton is heading to Michigan for a campaign event in Detroit. Vice President Joe Biden will be in Madison, Wisconsin. So, Mark, we talked yesterday about how the Clinton campaign is going on the air with big ad buys in several of these deep blue states. 24 hours later, what more do we know?
Well, in talking to the Clinton campaign, they claim this is not panic. This is not seeing their numbers crater. They simply believe that it's prudent, given that they have a lot of surrogates and that Hillary Clinton has a lot of money in her bank account, to make sure they're playing defense in these states. The other thing is you've got Clinton supporters in places like Michigan and Wisconsin who are from the bedwetter category, who are screaming and saying, you need to fight to save this state or you'll lose it. They're trying to keep that from being a firestorm because those bedwetters, if they don't get what they want, will often leak to the press. The Clinton campaign isn't paying enough attention to our state.
Yeah, I mean, you can't overstate how much of that kind of howling occurs in the last days before a presidential election, where the local Democratic parties and local donors in various places start calling up the campaign and saying, oh my God, please send somebody here. If you don't, it's going to be a disaster. And so if you have the resources, and both human resources in terms of surrogates, and you have the financial resources to be on the air, there's just no good reason not to spend those resources, again, both financial and human, to try to calm those people down and play defense to the extent that defense is required.
Yeah, if you look at the Big Five right now, you'd have to say that Clinton's bad run has solidified Trump's position in both Iowa, here, and in Ohio. That still leaves him with three of the big three to try to win. The Silver State, as I like to call it, Florida and North Carolina. And then, of course, it's still, if he won them all, he'd still be 5 short, as we talk about all the time. So I think Clinton is trying to hedge against a possible loss for Trump, for her somewhere that Trump can make up with elsewhere. All right, up next, more from here in Waterloo, Iowa, right after this. Welcome back. I am here in Iowa where news broke overnight that 2 Des Moines area police officers were ambushed in their patrol cars, fatally shot. It's captivating the state. Talked to Governor Branstad about it earlier today. Police arrested a man, 46-year-old, earlier today in connection with these shootings, which have rocked the state. Governor Branstad told me that that's been his focus today, although campaigning goes on. Tim Kaine and Bill Clinton, however, canceled an event that was supposed to be held this evening in Des Moines, but Bill Clinton is set to speak here in Waterloo, east of Des Moines, where I am now, and joined by Christina Krippes, our political reporter for the Waterloo Cedar Falls Courier here in this eastern part of the state. So you got a governor's race, a Senate race, you've got the presidential, and in this district, Eastern District, which is a Democratic district, you've got an incumbent Republican House member, Paul Ryan, here on his behalf today. Talk about how that House race might impact the presidential in this vote-rich part of the state.
It's an interesting race because Rod Blum is supposed to be one of the most vulnerable incumbents, but he hasn't really seemed like it, and he hasn't really been acting like it. He's had the benefit of Iowa being one of the few toss-up states or swing states that's leaning toward Donald Trump, so he hasn't really been acting like he's vulnerable.
This is a first-term Republican congressman in a district that voted overwhelmingly for President Obama twice. What has Congressman Blum said about Donald Trump throughout the campaign, and particularly after the Access Hollywood tape?
He has been very clear in his support. He doesn't go out of his way to mention Donald Trump, but he will, when asked, say specifically that Iowa is still behind Donald Trump.
The conventional wisdom and the public polling suggests Clinton has a lead here, and Trump has a lead here and has had a lead. How much has this part of the state been engaged with the presidential race?
It's been interesting because we haven't seen too much of the actual candidates. We've seen more surrogates, and this is about the second time I've seen Bill Clinton. So it's one of those areas where we're getting a lot more surrogates rather than the actual candidates themselves.
Okay, President Clinton is here, and he is speaking. So, Christina, thank you very much. And, John, we'll throw it back to you.
Welcome back. Coming back to the show, we're going to cut away from Mark Halpern there in Iowa and bring in Michael Steele, the former chairman of the Republican Party. Michael, you're in Washington, D.C. Good to see you. Give me a sense on the basis of what you know right now. We've been talking about the state of the race. It's all anybody really cares about right now. What's your sense of where we are?
It's very fascinating, man. There's I don't know where the energy's coming from, but Donald Trump seems to have garnered a great deal of energy from various pockets within the party and around the country. In listening to Kellyanne Conway today talk about this race, you really get the sense that they've got their fingers on something. Either they figured something out or something's moving in their direction. Now, this may be just a 24-hour thing on the heels of what's developed with Hillary Clinton, but there is a different kind of energy out there. I was just out today at a Starbucks just talking to folks, and it was surprising to me, almost a resignation that Trump could possibly win this thing here in the metro area. So it's a very different climate, I think, in the last 24 hours or so, and you're seeing it pop up in various parts of the country, and it's going to be interesting to see how the campaign galvanizes that, given the lack of organization, if we will say in the traditional sense, that they seem to have on the ground.
Michael, do you think that